Hello everyone, welcome back to the channel. In today's video, we have got something special. For that, I might would end up deleting this video. Alright, so this is gonna be a serious topic about VIX and how you can calculate it and make yourself a good chunk of money. So we're diving deep into the VIX, also known as the Volatility Index or the market's peer gauge. Alright, we'll explore what the VIX signifies, analyze its current level, and understand how its high and lows can influence your trading decisions. Additionally, we'll delve into the relation between VIX and PCR, aka put call ratio, discuss different types of volatility, that is historical, implied and expected future, and most importantly translate all this into actionable trading strategies. So let's get started without wasting any further time. Okay, so the first part of this video is like, what is VIX and why does it matter so much? Okay, so let's begin with the basics. VIX or volatility index, specifically the India VIX for the Nifty 50, reflects the expected volatility in the Nifty 50 index over the next 30 days, derived from the option prices. In simpler terms, it gauges market sentiment regarding potential price fluctuations, right? So let me tell you, Nifty is like the medicine that you take for every disease, right? So let's put it in that way. With Nifty, you can, get an idea of your body, like which part of your body is not functioning well, or which part of your body you are sick or not functioning. You get the idea. So when the VIX is high, it indicates increased fear or uncertainty among traders, suggesting expectation of significant market movement, often downwards. Conversely, a low VIX implies market stability and confidence, with traders anticipating minimal price swings. Yeah. So now this is like, typically the VIX fluctuate between 12 to 18%, all right, during stable period. However, during high stress events such as the market turmoil in early April 2025, due to global trade war fears and all, it can spike significantly, reflecting heightened market anxiety. For instance, on April 7, 2025, the index India VIX saw a massive surge of over 65%, right? So currently, Nifty VIX and yearly high low. Let's discuss that. So as of April 8, 2025, around 12:30 IST, if I am telling this, India VIX stands approximately 20.44. To put this into perspective, 52-week low would be around 8.98 and 52-week high would be around 31.71. From this, you can get a clear idea of the market condition right now and whether you should be investing in this market or not, or in particularly in which sector you should be putting your money, right? Understanding this figure is crucial, right? The current VIX level of 20.44 is significantly higher than its 52-week low, indicating a period of heightened market volatility and investor nervousness. While it has come down from peak of 31.71, it still suggests that the market is experiencing more uncertainty compared to the calmer period represented by the 52-week low. A VIX near its low around 8.98 might indicate market compliancy, which can sometimes, um, precede downturns. Conversely, a VIX near its high suggests, heightened fear, that is around 31.71, potentially signifying a market bottom or upcoming volatility. The current levels suggest that although fear has subsidized from its peak, volatility remains elevated, as I told you, right? So VIX and PCR relationship, the power combo, like how does this thing work or synchronized? Well, combining VIX with PCR, provides a more comprehensive view of the market sentiment, right? while PCR measures the ratio of put options and to the call option indicating bullish or bearish tendencies. VIX reflects the expected market volatility, whether any volatility is over there for you to grab or not. So that's the thing. Now I've got a chart prepared about VIX and when should you be trading. Like let me just tell you, if you guys want it, I will just attach the file over the description box below. So PCR high like above 1.2 and VIX is also high above 18. So interpretation would be extreme fear in the market. What would be my suggestion, or the suggestion that should be generalized suggestion, more like, so look for potential buying opportunities, market may be oversold. All right, so if the PCR is high above 1.2 and the VIX is low below 14, mild panic. All right, cautiously accumulate position. I'm just telling you guys this kind of thing so that you can get the idea by just by watching the VIX and the PCR. You can apply this with any share, any stock or any index, right? So now if the if it's low, right? So now let's just say PCR is below 0.8 and VIX is high above 20. Confused volatility. Exercise caution, avoid new position, as I told you. All right, now the thing is PCR is below 0.8 and like VIX is above 20. Confused volatility, exercise with caution, avoid new position. And low below 0.8 and VIX is like below 14. Overconfidence in the market, right? Consider booking profits, market may be overbought. Okay, I am sharing with you guys a certain strategy, that is if you can get any stock or anything like 0.20 should be the PCR and you can buy it, right? And if you see it above 1.70, just close your eyes and sell it. So that's the simple logic that I would like to give to my new trader friends or anyone who has been in this market. All right, as of April 7th 2025, the Nifty PCR dipped to around 0.58 to 0.60, right? Coinciding with a high VIX around 22.79, as I told you about the fear index, right? This combination of low PCR indicating bearish settlement with more call buying or put selling, and high VIX indicating high expected volatility and fear index, right? So what does that say? Or suggest a market under significant stress and a potential shape for reversal, sharp reversal. On April 8, 2025, the with VIX cooling down to around 20.44, the PCR might show recovering, but still needs to be monitored in conjunction with VIX level to gauge the sustainability of the market rebound. Some sources indicate a Nifty PCR around 0.6339 on April 8. This slightly increases from the previous day while the VIX decreased, could suggest some tentative buying interest returning, but still reflects overall caution. By analyzing both VIX and PCR, traders can make more informed decision, aligning with their strategies with prevailing market sentiments. For example, a high PCR might present a contrary buying opportunity, betting on a potential decreased in volatility and market recovering from oversold conditions. All right. So conversely, a low VIX with low PCR could signal on overbought market, right, for correction. You know. Now let's analyze VIX different time frame. All right, understand how to analyze VIX over various time frames and assess its utility, right? So daily analysis, monitor daily percentage change in the VIX on I will be just sprouting over the data over here, like it was around over 65%, clearly sign of extreme panic. On 8, that is today, it dropped over by the VIX dropped over by 10%, indicating a significant decrease in the fear immediately. As of now, market has already recovered around 300 points, if I am not wrong. Within 2 days, around 600 points it recovered, and that's kind of shocking. Plenty of my friends or clients were holding on to that. More or less, many of them who were holding the put side, they made a shit ton of money yesterday. And those who went for the call side, instead of saying that don't go with it, they lost pretty good amount of money, like zero. Like premium went from 100 to 20 or 10 real quick, so I can say that much, right? Now, a spike of over 10% in a single day may sign rising panic or anticipating market decline. A drop of over 10% could indicate returning stability of or potential market rallies. Weekly analysis would be like compare weekly closing values of VIX and Nifty movement. Rising VIX with falling Nifty indicates market weakness. Falling VIX with rising Nifty suggests market strength. Stable VIX reflects market indecision. For weekly ending as of April 8, the VIX showed a sharp increase initially followed by a decrease, while the Nifty saw a significant drop and then partial recovery. Analyzing the weekly close will give a better perspective on the dominant sentiment. Now, monthly and yearly analysis. Now, how you should be calculating it, I will be just telling you guys it verbally. But if you guys want to know it, I will be also attaching handwritten PDF note over my Telegram channel. You can just go through it. Now, access monthly average VIX in a relation to 52-week high and low. A VIX near its yearly low with the market at all-time high may signal compliancy. Exercise cautiously. A VIX near its yearly high could indicate that fear is priced in and potential preceding in a market rebound. Additionally, monitor option premium high VIX example above 20. I shouldn't be saying out all this kind of things, but this kind of detailed information will be available only on Telegram, and you might be getting some trade insights as well, although I won't be saying exact price or anything, but yeah, you will get something out of it, right? So now discuss about types of volatility. All right, so I will just touch the basics of it, since this is not that crucial, I believe. So types of volatility: historical, implied, and expected futures. Understanding the different type of volatility is essential for informed trading. Okay, so I want to know, like, what kind of vibe do you guys get about my teaching and all. Do comment down in the comment section below. So let's get on with this historical volatility, HIV, not HIV, HV actually. So reflects past, market movement over specific periods, such as standard deviation or daily returns over the last 30, 60, 90 days. It's backward looking measurement indicating how volatile the market has been. You can calculate this using historical price data. For example, you might find the 30-day historical volatility of Nifty by looking at the daily percentage change over the last 30 days and calculating the standard deviation annualized. I'm not doing Kathak, by the way. Alright. Now, let's talk about implied volatility. What is IV, implied volatility? Now, derived from current option prices using option pricing models like Black's Scholes, IV represent the market's expectations of future volatility until the options expire. High IV, that is implied volatility, suggests anticipated significant price swings, while low IV indicated expected stability. VIX is key measurement of the implied volatility of the Nifty 50 index options. You can see the IV individual Nifty option in the option chain data provided by the brokers. Now, let's talk about the option chain, right? Option chain is basically you will get the Y over there, open interest will be there, and in the option chain you will be getting the price of different ranges, right? Suppose the market is moving around 2500, I mean 25,000, so you will get prices for option buying and option calling, that is call and put. So it will be two different kind of things. So for call, if the market goes up, you should be buying call. And if you think the market will be going down, then you should be buying put. So you will get a wide variety of data over there. And if you want to know more in details, just do let me know in the comment. I will discuss detailed video about the option chain in the near future. So all right, now implied volatility I have already discussed. Now let's talk about expected future volatility. What is it? This is more subjective assessment that combines insight from HV and IV along with upcoming economic events like RBI policies announcement, earning reports of major companies, or geopolitical developments like the recent trade war fears to predict potential market volatility. It involves analyzed the difference between IV and HV, known as the volatility skew or the terms structure, and considering the future catalyst. Now, trading implication, where should you be, putting this kind of data into use? Where should you be using? When the IV exit HV, options may be overpriced relative to the recent actual volatility, favoring selling strategies like short trades or strategies. Do let me know you guys are into scalping or not. I will just share my scalping strategy then. The expectation is the actual volatility in the future will be lower than that what is like current priced in the market, right? Options. So when the IV is below HV, so IV is below HV, options might be underpriced, making buying strategies like long calls or puts more attractive. This suggests that the market might be underestimating the potential or future price movement, right? Now let's talk about the trading strategies using VIX. So this is gonna be the real thing. Avoid buying options, right? When VIX is high, avoid buying options above 20 to 25, right? I'm not discussing anything beyond this, but option premium are inflated due to the high implied volatility, making them expensive. You should remember this. The potential upside might not justify the high cost. So I've gained a lot of experience. I've lost more than the money that you can imagine. So just take my word on this. Now consider selling options capitalized on higher premiums by employing strategies like short trade or short strangle over candle cash or secure put. However, be mindful of the risk, right? Now, enjoy tight high stop loss for direct trade. Utilize hedge strategies when VIX is low, below 12 to 15. Buying options becomes more cost effective, right? So be careful of potential market reversal if VIX is near its 52-week low. Avoid aggressive option selling. Focus on potential trades in trending market. Now combining VIX with PCR, falling VIX with rising PCR, ideal for initializing long position. As I told you, this suggests that fear is receding and bullish sentiment is increasing. And if VIX with falling PCR suggests in reducing exposure or hedging hedging exiting position, right? I mean exiting position. Damn, I'm stammering. I have been speaking a lot lately. I think that's right. Anyway, so right now, what is my final thought? So in live class, what we will do? Live class is like for for people who want to join me trade or anything like that. So live class will be like I intend to take few live class over there. Very serious kind of person or who is really interested over there. I want them only. So if you are really interested and you have got some capital and you are sure or you are confident in yourself, then only join for the live trading or live class, I would say. The price and all that we are still deciding, and me along with one or two other friend or other teachers will be there, or other experienced people will be there who has got around at least 5 to 10 years of experience. And then there's my sir or mentor whom I follow, who has around 20-25 years of experience. So huge respect for that guy. He's doing great job out there. I still get a lot of insights from him. The VIX is more than now. Let me just end this video with my final thoughts and conclusion. So the VIX is more than just a measure of market fear. It's vital tool for traders to gauge potential market movement and sentiment. By analyzing VIX alongside indicators like PCR, volume, and institutional activity, you can anticipate market trends more effectively. Remember that the ideal VIX level can vary depending on the market conditions and your trading strategies. Always remember to integrate this insight into comprehensive trading plans, considering your risk tolerance and market conditions. The recent spike in VIX due to global trade tensions highlights the importance of monitoring this index of for risky management. If you found this video really helpful, please do like, share, and subscribe. Share it with your friends, and subscribe for in-depth market analysis. Drop your questions or topic that you'd like to be covered in the videos. Now, if you want to trade in forex market or crude oil or anything like that, then you can definitely join me. You should join me for trading. I am building a community over Telegram. You would see the trades that I take. I will be just giving it over there for free, no charge, nothing. And for the classes and all that, we intend to start, but later on, and I will be, saying it out loud later on. Bye bye. So good night. Bye bye. Sayonara. Happy trading, and make sure to take your SL. Yeah. Do it. Bye bye. Sayonara. Peace out.